It is Sunday. The weekend's winding down. It's time for the weekend wrap. We're going to take a look at the majors and a couple of the end crosses to see what we have going on heading into the next week. Last week was another week of general consolidation. We had a bit of a drop here and there in some of the majors, but we haven't had any real momentum moves in either direction, which and extremely slow trading, which makes trading a little bit more difficult if you look at a short-term perspective. If you take long trades, which will fry your nerves, you have a better chance of catching pips here and there. All right, let's start off as usual with the Euro USD. As you can see, the Euro last week, to kick things off, broke below the ascending trend line that had capped the price action and had ridden higher for the last few weeks. And now the pair then the pair continued to drift gradually lower. I mean, it moved down from 130 down to the 129.40 level. It wasn't a massive move, basically down to the 129 level. But at 129, it found some support on Friday, and it bounced back to about mid-range. Now heading into the new week, the prices I'm going to be watching. Let's move that actually. Prices we're going to be watching. I'm going to be watching is the 129 level and basically about the 130.60 level for resistance. We'll have to get a break of either one of those to get out of the current consolidation. But to really get out of the current consolidation range, we need to either break above the 130.170 high from last month, or break below the bottom of this consolidation range, which looks like it comes in around 128. And if we get through those levels, we can get through the 128 level. We could be heading down to the 126, which is the 50 fib from the move higher. If we break above the top of the level, we could be moving up. We can see we have the increments here. First resistance level would be 132, then we have 133.80, and then 135. And until we break out of the zone, then we'll still just be consolidating here. And you could try playing short-term scalps in between to try to catch a few pips here and there. The next pair we're going to take a look at is the Great Britain Pound USD. It looked as though the cross was moving down on Thursday, but it reversed on Friday. As you can see, we have basically moved up to the top. Let's get a better look at this on a one-day chart. We moved up to the top of the descending channel that contained the price action for the last few weeks, and now we are just riding that channel lower. And until we riding the channel lower, and it has even above the channel, it has serious significant resistance right here at 161.40. So any move up to this level, people could be looking to go short there and have their stops above the 161.40 level for a push down towards the bottom of the channel, or at least maybe the midpoint of the channel around the 160 level. But right now, right here, all you have to do is watch the resistance up between 161 and 161.40, and the first level of support is that at 160.50, followed by the 0.382 fib at 160. Next pair we're going to take a look at is the Aussie USD. As you can see, the Aussie and USD has a resistance zone here, and as long as the pair is below that resistance zone, it favors another test back lower of this descending trend line, which let's redraw it. The descending trend line, which the ascending trend line here, which we can see. So it's basically a wedge, and the descending trend line comes in right now around 102.65, 102.60, and if until the pair breaks out of the top of this zone at 104.10 or the wedge, we can probably get more consolidation. And this week we don't have any real significant data flow until non-farm payroll on Friday, and so we could just see more of this continued meandering trading back and forth. You could almost say there's also another triangle here with the another triangle forming here, right there and right there, and you're looking for a break of that triangle that could lead to a test of either the top or bottom of the range. The top or the bottom. If we get a break to the top side of the triangle, we would more than likely break out of the 104.41. We break out of the bottom, we could still find support down at the bottom in this ascending trend line. So in the short term, though, we're going to look for a break of the triangle, or more importantly, I'm going to probably not trade off this triangle. And the even though it is very significant, it is a significant setup. You can be looking. I'm going to be looking for any move up to the top of this range here, or to the bottom, and watch the price action there to see if we get a bounce to the bottom of the back, to the bottom of the top of the current range. New Zealand USD consolidation is the word here. It is sitting right at the top of its current range. There's around 82.35. The range for last week, but the broader range, we have resistance up at 83.50, and at the bottom we have it. Let's look at it on a 1 hour chart, and on the bottom we have it between 81.30 and 81.10. It'll take a break of this to get the pair out of consolidation. What I would be looking for is any another move up to about the 82.35. You could see if sellers come in, and I would expect stops to be above the 82.50 level. If they're ever going to move up towards the 82.50 level, we could see a squeeze higher, and then we would see the move up towards the 83.50 maybe in the cards. And we have the resistance down here at 81.30, 81.10. 81.10. So if any move up to these extremes could be an opportunity to scalp the extremes, looking for moves to the opposite side of the range. The CAD has been an interesting pair this week because it has continued to move up, and it has been following its own beat with the falling of oil. Its own beat, basically, while most of the majors were consolidating or gaining its dollar, the CAD was also losing ground. So let's see what we have here, though. The pair is basically trading above the 99.50 level, which was a significant price, and you can see it broke above the highs of the week last week, but it couldn't gain any momentum to move higher because buyers seem to come in below parity. It has really been consolidating right now with parity right above. I would look for either a test of parity and a break back down to the 99.50 level as an opportunity to go long, looking for a move up towards the 50 fib up to 100.40, or any move up to the 100.40. If that happens without just a straight red move line through parity, buyers could come in there, because that would be a 50 fib test of the entire move lower from last May. So there could be a lot of interest there into see if the move has legs to continue to a test of the downside. Last pair we're going to look at on the majors is the yen. The yen looked to be on a run this week, and then swiftly reversed. Apparently it was close to the 80-60 level, and there was weekly and monthly pivot levels in there that caused a reversal in the pair. The pair is now testing a 79.60 resistance level. If we break below that, we could be in for a further retrace down to 78.85 to start the week off. If we get a bounce here, though, the move could continue higher, and we would target moves up to 80.60, basically the 81 level. Let's look at most of the yen crosses we'll look at very quickly. The Euro JPY, similar to the yen, broke higher, creating new highs last week, but couldn't gain any momentum. What now? And you see after breaking out of that triangle, it did move. Broke out at 102.85, and it moved all the way up to 104.40. So that was a nice fib move. Now it's moving back down to test this 50 fib level. We'll see how the price action works there. If we get break below that, we could see it move lower, first targeting the 100.70 level, and then back down to 100. Now, if we get a bounce here, we'll have to watch. Basically, the 50 fibs is going to be the key to watch. We get a bounce here, we could play for another move back up to the 104.80 level at the 0.618 fib. The next pair to watch is the Aussie JPY, because it has had a considerable reversal here without being able to gain momentum higher. It did change its course right at the highs from in August at 83.50, and now it is below the 82.70 level, which was prior price support. Which actually, I'm going to move that up to 83 actually, and because what I'm going to be looking for here is, actually we're going to put two lines there to make it more realistic. We're going to stick with that 83.60 level, and what we're going to be watching here is as long as the pair remains below the 83.60 level, I would favor a move back down to 81.65. But if the cross does gather momentum to gain back, and because basically this is going to be the pivot into the beginning of the week, if we break back above the 82.60 level, we could easily see another push back down to 83.50. So the key is to watch the 82.60 level, to watch the price action there, and to see what we have going. The next is, let's take a look at the Great Britain JPY, because very similar to the euro, it broke higher and then it quickly reversed course. and now it's sitting right at the past resistance level from last week, which now is going to actually support at 128.16. It's going to be all about a break or hold of this level. If we break below this level, we could be on our way to 127.50. If we hold, we could easily see another bounce higher, and the 128.80 level isn't really as a concern to us anymore. We're going to be watching the 129.60 level. So it's going to be, let's put these levels here, the 129.20 level, and we're looking for a bounce there or a hold there. If we get a hold, we could be easily going back down to the 50 fib at 127. So 128.22 is holding the key. The CAD JPY is interesting because, as clockwork, it totally reversed at the top of its current range. So, and now it's at the bottom. So we could see it's interesting. It's going to be the third, fourth, like the fifth time in this bottom range. So it'll be interesting to see if buyers come into here at the 50 fib, and if they don't, we have another opportunity for buyers to come in down here at the 78.80 level. So what we're going to be watching for is the price action here at 79.67. We could get a move back up towards the 81 level. If we get a break, we'll watch the if we get a break, that trade would be null. We have short stops, and we would look for another move higher at the 78.85 and looking for a test of the top of the range. I think the last pair we haven't looked at is New Zealand JPY, similar to the Great Britain Oz. It had a false breakout and moved up to the 66 level, and now it's back below its current range, or basically right at resistance. So what we have in the yen pairs is we have a lot of pairs testing resistance and supports, and basically pullbacks from their breakouts earlier in the week. And we'll have to watch heading into the beginning of the week to see if which way the pairs break at those levels, and it could give us an indication of which way things are going to be going. And what we have in the pounds, we're sitting at channel resistance, excuse me. The Aussie looks like it's in a triangle. The euro seems to be consolidating and is sitting mid-range right now. The CAD looks like it could be on its way for a test of the 50 fib at 100.40, and New Zealand is range trading, and the bottom of the range is 81.10, 82.35. All right, everybody, have a great weekend, and I will be talking to you later in the week. All right, remember to keep your trades keen and the blades safe. Everybody, great weekend. Talk to you later.